The US dollar has been the dominant global currency for roughly 100 years. However, the international financial system is changing and the global dominance of the US dollar is eroding. Now, it's not going to disappear overnight. This is a process that's been going on for years and even decades, but it's a process that is also accelerating. And there are several reasons for this. Of course, one of the key drivers is geopolitics. The US government has weaponized the dollar and has imposed unilateral sanctions on 1/3 of all countries on Earth, especially global South countries. And this has led them to come together in organizations like BRICS to seek alternatives to US dollar dominance. And more global South countries are now trading with each other in their local currencies. However, this trend of dollarization of the decline in US dollar dominance is not only driven by political institutions and states, it's also being driven by investors, by business interests. And one of the other reasons, there are multiple reasons for de-dollarization. It's not just two, there are multiple factors, but one of those other factors is what's known as the debasement trade. Investors fear that with US government debt skyrocketing and with high rates of inflation in the US, the currency itself could be debased. The US dollar will lose value, investors fear. So instead, they've been diversifying and investing in other assets. And a case study of this is gold. This idea of the debasement trade is one of the main reasons why the price of gold has skyrocketed in recent years, along with the geopolitical angle which I'll be discussing today. Again, these issues are directly inextricably linked, the geopolitical element and the economic element. And today, I'm going to be explaining how, while private investors have been piling into gold in recent years, governments have also been doing the same. And central banks have bought so much gold in recent years. And the price of gold has risen so much that gold has now overtaken US Treasury securities, US government debt, as the biggest asset held by central banks around the world. Now, if you follow our work here at Geopolitical Economy Report, or if you're on Finance Twitter, or you maybe follow financial analysts on social media, this news won't come as a surprise to you. There was a chart that went viral from August 2025 that showed how gold holdings as a percentage of the reserves of central banks overtook US Treasuries in 2025 for the first time since 1996. However, today I'm going to be explaining how even some Western financial institutions are now officially acknowledging this fact. The European Central Bank, the ECB, published a report this June 2026 that acknowledges that gold has now become the biggest asset held by central banks. Today, I'm going to look at the highlights of this report, because it's very interesting. Now, the reason that the European Central Bank published this is it's emphasizing the international role of its currency, the euro, because it's not just some global South countries like China that are encouraging the international use of their currency, but also the EU. It wants the euro to play a more important international role. And as the dominance of the US dollar declines, Europe hopes that the euro will help to fill the void. And if you look at the data, you do see a steady use of the euro in the reserves held by central banks, but you don't see a significant increase in the holdings of euro. At the same time, you do see a massive increase in the holdings of gold. And here I'm looking at a chart that is from this ECB report. And it shows the dominant assets that are held by central banks and the reserves including gold, euro-denominated assets, US Treasuries, other US dollar-denominated assets, and then other currency-denominated assets. And you can see that at the end of 2023, gold represented 16% of the reserves of central banks. That was at the same level as euro-denominated assets. At the end of 2024, that figure increased. Gold represented 20%. And as of the end of 2025, gold represented 27% more than 1/4 of the value of the reserves held by central banks around the world. And what's striking is this chart shows how at the end of 2023, US Treasuries, US government debt represented 26%, and as of the end of 2025, that figure had fallen to 22%. And what's also interesting about this chart is it looks at the top central banks that have been buying gold around the world. Now, Tether actually bought the most gold. This is a cryptocurrency company that manages stable coins. But after this company, you see the central banks of Poland, Kazakhstan, Brazil, China, and Turkey have been some of the biggest purchasers of gold. Now, this is interesting because many of these countries are BRICS countries or are interested in BRICS, including Brazil and China. Turkey has expressed interest in BRICS along with Kazakhstan, and Kazakhstan is part of the Shanghai Cooperation Organization. Poland is an interesting outlier because Poland is a member of NATO. It's very pro-US. It's very anti-Russian. But this is probably because Poland is concerned about geopolitical conflict, the proxy war in Ukraine, which is right next door. And the ECB report itself acknowledged this. It noted that, quote, persistent geopolitical tensions continue to drive strong central bank demand for gold. Survey evidence suggests that geopolitical risks remained a key concern for central banks, with many identifying geopolitics as one of the fastest-growing threats to their environment. End quote. And you could see this clearly reflected in the data. The ECB published several other charts that show how in 2022 central banks massively increased their purchases of gold, and it's no secret why. This was in response to the proxy war in Ukraine, and in particular the US and the EU made the extraordinary decision to seize $300 billion worth of US dollar-denominated assets and euro-denominated assets that belong to the Central Bank of Russia. And this caused a global scare because many central banks in global South countries feared that they could be next. They could be the next target to have their reserves frozen, seized, stolen by Western governments if they did something that Western governments don't like. After all, this was not the first time that the West had frozen the assets of a foreign country in this way. What was unique about this is that Russia was the biggest and most powerful country to have its reserves seized by the West. But previous targets of this Western piracy have been Iran, North Korea, Libya, Syria, Venezuela, Afghanistan. In 2019, the first Trump administration started a coup attempt in Venezuela, trying to overthrow President Nicolas Maduro, who they eventually did overthrow in an invasion. But at that time, the US and European countries stole billions of dollars of assets belonging to Venezuela's central bank. So this is why it makes perfect sense that when you look at the data on central bank purchases of gold in their official reserves, you see a massive increase starting in 2022 and continuing in the subsequent years, because it's now clear to the entire world that US Treasuries and also, by the way, euro-denominated assets are weaponized. They have been weaponized by the Western powers, and they're no longer totally safe neutral reserve assets if they ever were in the first place. And by the way, while we're on this subject, I should point out that all of the data that I've been looking at so far is based on official reserves. So central banks around the world report what assets they have in their reserves. However, there are many reports suggesting that countries like China have much larger unofficial reserves that they don't report because they don't want it to be seized in the case of a conflict. They're afraid that the US may one day wake up and impose more sanctions on China and cut off its banks and freeze its assets like the West did to Russia and Iran and Venezuela. This is why the Financial Times reported in 2025 that there is some evidence that suggests that China's unreported gold purchases could be more than 10 times its official figures. And that's extraordinary because the Chinese government has already been the #1 institutional state purchaser of gold in the past decade. From 2015 to 2024, China's central bank bought more gold for its official reserves than any other country. Russia came in second, Turkey came in third, India was in fourth. Again, these are major BRICS countries or BRICS-curious countries. However, I think it's also important to point out one other detail here, which is that this did not all start in 2022 with the war in Ukraine. This is a gradual trend that has been going on for decades, but it has been accelerating in the past few years. The International Monetary Fund, which is a US-denominated institution based in Washington, the US is the only country with veto power in the IMF. But despite that, the IMF has a policy division and it has a research division. And the research division does publish a lot of very useful data and information. And the IMF has acknowledged that there has been what it calls a stealth erosion in global US dollar dominance in recent decades. The IMF notes, for instance, that in 2000, US dollar-denominated assets made up more than 70% of the foreign exchange reserves held by central banks. And as of 2023, that figure had fallen to roughly 55%, maybe 58%, depending on how you measure it, and depending if you account for differences in the exchange rate. However, the problem with this data reported by the IMF is it's only looking at the currencies held by central banks in their foreign exchange reserves. That data from the IMF is not factoring in other assets, including hard assets like gold. But like this report from the European Central Bank has demonstrated, gold has now overtaken US Treasuries as the #1 asset held by central banks around the world. More than 1/4 of their total official reserves, not including the unreported unofficial reserves, which of course are very difficult, if not impossible to measure. So this is a major reason why we've seen such a massive rally in the gold market in the past few years. Now, to be fair, I'm speaking in June 2026. In the past few months, the price of gold has fallen a bit. Part of this is simply because there was massive speculation. The gold price probably went up way too quickly. The animal spirits were driving investors into some kind of frenzy. So we did see some profit-taking at the beginning of 2026. Some investors who had bought gold not for geopolitical reasons, but simply because they wanted to make money cashed out their holdings. That partially explains the relative fall. However, there have also been some geopolitical reasons for this. And one of those is the US war against Iran has caused a massive energy crisis, the largest oil crisis in recorded history. And this has put a lot of inflationary pressures on global South countries, and their currencies have fallen against the dollar. So they've been forced to sell some of the gold in their reserves to try to stabilize their currency. The ECB pointed out in its report that Turkey's central bank, Turkey, was one of the countries that did sell some of its gold holdings to try to stabilize its currency. This makes perfect sense because many global South countries that don't have significant oil reserves often have chronic current account deficits. They import more than they export, and especially as the price of oil skyrockets due to war. This causes their current account deficit to increase, which puts downward pressure on their currency. It tends to depreciate against the dollar because oil prices are globally denominated in the US dollar. This is the petrodollar system. So countries like Turkey have seen their currency, the lira, fall against the dollar. So now that gold has become the most important reserve asset, it makes sense that these countries are selling some of their gold. Their central banks are selling some of the gold to try to stabilize their currency. What they can do is, instead of selling US Treasury securities, which by the way some central banks have also been doing like Japan, they can sell gold and then they can buy their own currency in the foreign exchange market to try to cause it to appreciate, to stabilize its value. So you don't see significant depreciation, which would exacerbate the inflationary pressures. So this is one reason why we've seen the price of gold fall in the past few months. This is something that's entirely natural. It's normal. No asset permanently just goes up and never goes down. This is part of the process, but I think we're seeing a secular trend where over the medium to the long term, the gold price will continue rising very steadily. Now, one other quick note on this issue. I just wanted to point out, for geopolitical reasons, it's quite funny to see the double standard in the rhetoric of the European Central Bank, because in this report that the European Central Bank published, it referred to the US war of aggression against Iran as, quote, the outbreak of war in the Middle East, end quote. They use this ambiguous language. War broke out magically. It wasn't caused by a country. It wasn't started by their top allies. But then just a few sentences before, in the previous paragraph, the ECB refers to, quote, Russia's full-scale invasion of Ukraine, end quote. So when Russia attacks a country, it's a full-scale invasion. When the US attacks a country, it's the outbreak of war. No one knows. It just broke out magically. So obviously, you do see these very clear double standards. You do see this political bias even in these technocratic documents published by central banks. But all of this simply reaffirms the point that I've been making here, which is that you cannot understand the economic shifts we see in the world and the changes in the international financial system if you do not consider the politics of it. We need a political economic understanding using political economy. You can't separate the two, because then otherwise you won't understand what's happening. Now, with that said, before I conclude, I want to make one other major point here, which is that this is actually a buying opportunity. When the price of gold falls, that's actually a better time for central banks to buy it, because the point of a good investment is you want to buy low and sell high. Even though when you have this kind of bubbly mania like we see in so many asset classes, gold is certainly just the tip of the iceberg. Don't even get me started talking about the insanely high evaluations of US stocks right now in the AI bubble. That's a whole other issue that we have published videos about here at Geopolitical Economy Report. But central banks normally are price-insensitive buyers because they're not necessarily buying an asset to maximize capital gains like an investor would try to do. Instead, they're buying these assets for their reserves in order to stabilize their currency and maintain macroeconomic stability, to keep inflation low, to keep unemployment low. However, when the price of gold falls like we see now, this is an opportunity for central banks to pile up and buy more gold. And this is exactly what China's central bank, the PBOC, the People's Bank of China, has been doing. So, while some countries like Turkey and also Russia have been selling some of the gold in their reserves to stabilize their currency amid the inflationary pressures, and in the case of Russia, to finance the war efforts. At the same time, we do still see central banks buying up more and more gold. This is a trend that's going to continue, and Chinese authorities have made it clear that they want to reform the international financial system to create a multipolar financial system. That was the language used by the governor of the People's Bank of China in a historic speech that he gave in 2025. His name is Pang Gongsheng, and in the speech, he called for a, quote, multipolar international monetary system, end quote, in which it's not just the dollar that plays an important role. Of course, the dollar will still play an important role, but it will no longer be the only game in town. There will be other currencies that will play a significant international role, including the euro, including the renminbi, the Chinese currency also known as the yuan, and other currencies and other assets like gold. And this is a fact that has been increasingly acknowledged by mainstream Western financial media outlets in the past few years. The Financial Times published an article titled, "Prepare for a Multipolar Currency World." And that is exactly the direction that the world is moving in. And this is a point that many critics of de-dollarization and boosters of the US dollar system refuse to understand. They strawman the argument. They say that if you're arguing that dollarization is happening and it's accelerating, that you believe that supposedly tomorrow or next week, the value of the US dollar will collapse. There will be hyperinflation like Weimar Germany, and the dollar is going to become toilet paper. I don't believe that. Most serious analysts and scholars do not believe that. That is a straw man argument that is used by defenders of the dollar system. But in reality, what they refuse to see is that the dominance of the US dollar is indeed declining. Again, this is going to be a process that takes years, if not decades. But it is absolutely happening, and you cannot be an ostrich and have your head in the sand. What we've seen with the rise of gold, the massive rally in the gold market, and the rise of gold now as the #1 asset held by central banks in their reserves. That is simply one example of the tectonic shifts we see in the international financial system, in monetary policy, and in geopolitics, because all of these issues are inextricably linked. And if you want to understand about the massive geopolitical and economic shifts happening in the world today, it seems like every week or every month, there's another major thing happening. Make sure you subscribe to our work here at Geopolitical Economy Report. I am Ben Norton. I'm the Editor-in-Chief. I want to thank everyone for joining me today. Please again like and subscribe. Share this. I will see you all next time.